Welcome to today's edition of Beyond Checklist, and I'm your host, Dennis Odi. If today is the first time you are coming across this video, I will encourage you to hit the subscribe button and share it for friends and family to also stay connected. Today's program is sponsored by Flav Kitchen, your number one go-to place for all your catering needs. You can contact Flav Kitchen for all your catering needs. Do not forget to use the promo code Beyond Checklist, and they're going to give you a very huge discount. I'm sure those of you who were able to watch our last video, we did talk about how you can put some strategies in place so that you can prepare for any life uncertainties that may happen. In the course of our discussion last time, our guest mentioned to us that there are different types of insurance. And as a matter of fact, I received some phone calls that we should bring our guest back so that she come and talk to us about the various types of insurance for people to be aware of and see how they can qualify for it. Our guest, Mrs. Sandra Owusu, welcome back to Beyond Checklist.
Thank you for having me, Beyond Checklist family. I'm thankful to be back.
As you mentioned the last time, we have different types of life insurance. I would like you to take your time and tell us the various types of life insurance that we have in place. Please try your best to break it down to the layman perspective so that our guest who is hearing this information for the first time will be able to also relate to it.
Yes, so I'm going to first introduce myself just in case this is the first time somebody's watching us. My name again is Sandra Owusu. I am a licensed financial professional, a wealth strategist, and a franchise developer. Going straight to the layman's understanding when it comes to the different types of life insurance. So we have the group life. We have the term life. We have the whole life. We have the index universal life, right? I'm going to take it one after the other and break it down so everyone would know where they fit in. When we take the group life, you get that from your job, right? If you are a full-time employee, a part-time employee with some companies, you are eventually going to get the group life insurance. So you have the potential to buy extra if you want more policies, because usually the companies, they only give you about maybe 50,000 or 100,000. And everybody's net worth is more than that, especially if you are a family man. So they give you that privilege to add up if you want to, which is really great. Right, that's another option that some people, they might not qualify for insurance. So group life will be best for them. That's the advantage of it. The another advantage is it's free, right? So which is good. We're going to dive more into it. So I'll move on to the term insurance. Term insurance, as the name says, it's temporary. Temporary means it could be 10 years, 15 years, 20 years, 30 years coverage. That's the term insurance. And we have the whole life. The whole life is for your whole life, basically up to age 100. I don't think too many people will live up to age 100, so which is pretty awesome. And then we have the index universal life, which has more strategies and more diversification into it. So basically that's the types of the life insurance.
So 4 types of life insurance. You mentioned the term, whole,
group
life,
and then the index universal.
Universal. Okay.
Yes.
All right. Thank you so much. So for someone who is looking forward to have a life insurance in place, right? What are some of the processes that you guys have in place to determine that this type of insurance will be the right fit
for
for
that
that
person.
person?
Yeah, which is a really great question. So the way we determine what fits who or what is based on we just gonna sit down, look at your finances as a whole, look at what your net worth is. So whatever that we come up with, we are able to determine, are you a single person, are you a family man, are you a business owner, do you rent, do you have a home, so all of that come in place. And then once we put all of that together, you have to go through an application process. The application process is very simple. We just ask you basic information like your name, date of birth, stuff like that, that every application will ask for. And then also you have to go through underwriting process because not everybody will qualify because they determine that by your health history, which is really, really another way that prevents people from having life insurance. So it depends on where you're at in life and all of that stuff. And another thing too, underwriters, some of times they will give you a call or reach out to the agent and say, hey, we want this person to do a blood work, vital checks. So it depends on, sometimes they will find something in the system that you didn't mention in your application. Example, somebody had it's diabetic or has high cholesterol, but they never mentioned it in the application. So in that case, they want to do a blood work to check your A1Cs, redo it to make sure you're not going to be a risk to them. So right after you go through the evaluation with the underwriter, you also get the delivery report. So they will approve it or deny it. Once you get approved, we sit down again, go through it, refresh your mind, and say, hey, this is what you sign up for. These are the benefit it's going to give you. This is what it does. And then we submit it back to them. You pay your premium, and you got a beautiful coverage for yourself and your family. Yeah.
For many of us, when it comes to life insurance, I think our number one ideology is we getting the life insurance just in case we pass on, our children or family members will inherit that money.
Right.
So aside death benefit, is there any other benefit that one should expect when it comes to purchasing life insurance?
Yes, that's another one misconception when it comes to life insurance. The ones that everybody knows is death, right? I'm getting life insurance. When I pass on, the money goes to my family. That's one misconception. But with the types of life insurance that I mentioned, when it comes to the index universal life, it allows you different strategies inside it, different riders inside it. Like example, you have the benefit of having the death benefit, which is tax free when, let's say, you are no more. You have the advantage of building compound interest in that account, which allows you to have that as a retirement strategy. You can set it up as a supplemental retirement account, let's say when you're going for retirement, and it's tax free, right? A lot of people don't know that because it's an index inside a life insurance account, which allows you to contribute as much money as you want in that account, depending on how you set it up. Right. Because, for example, let's say if you set up $100,000 policy, you cannot go and put in $1 million cash. Right. So depending on how big your bucket is, that allows you to put in more money and also transfer wealth to your generation. Because Proverbs talks about that a good man leaves an inheritance for their children. Right. So if you are looking for a way to leave an inheritance, leave a legacy, a life insurance it's another strategy that you can use. So aside just the death benefit, you are able to leverage the riders, which the we have the terminal illness, we have the chronic illness, we have the critical illness rider that comes with the index universal life. So while you're still alive, you are able to still take advantage and benefit from it. Another one is you are also able to take a loan.
Okay.
A lot of people didn't know that you can take a loan from your life insurance account, but it depends on what you're using. The Index Universal Life gives you that access for you to take a loan or even withdraw some of the money that you've put in because it builds compound interest. Yes. It's in like three different buckets. So you're contributing money, paying the premium. It allows you to withdraw or borrow. You have the living benefit, which is the illness riders, and then also the death benefit. So you can use life insurance as your own bank. Basically, you can. It depends on how you structure the Index Universal Life. You can use it as your personal bank because you are allowed to withdraw. You are allowed to take a loan, right? So let's say if I have an Index Universal Life and I have $100,000 in my cash value, instead of me getting 50,000 from the bank and taking, let's say, 18% interest on that, I can go into my life insurance, okay, take that 50,000 because it's my money. I borrow it against my life insurance. So the life insurance, which is the death benefit, becomes a collateral against what you're borrowing, right? And it's amazing how that structure is. You are also allowed to withdraw, right? But we want to build compound interest. And then when we talk about compound interest, we want uninterrupted compound interest. The moment we withdraw, we are interrupting how the money is growing. So you are allowed. It's amazing how you'll be able to set it up and use it as your own bank in your life insurance and just benefit from it while you're still alive. While you're still alive.
Interesting. So you kept emphasizing on the index universal life, right?
Yeah.
But you mentioned about 4 different types of insurance. So based on your opinion, you recommend the universal index as the best one that everyone should look into, because you kept pushing on that, and there's a saying that wherever the blacksmith keeps hammering or something, that means it's very important. So is the universal index the number one insurance that everybody should be looking into?
They are all good depending on where you're at in life. For example, if I meet somebody, we look at their finances and where they're at, and they're barely getting by at the end of the month, I can recommend a term for them. At least having something is better than nothing, because term is cheap, right? They'll be able to afford it. And the best thing, some of the companies allows you to switch the term into the permanent later on in life. So if my finances are tight right now, let's say a college student who is doing a little bit of job right here and understands life insurance but cannot afford a permanent one, I can recommend a term for them which will allows them to lock in their insurability. That means that the younger you are, the cheaper it is. And then if I lock it in my 19s, and let's say I'm paying $20 and I switch it to Index Universal at age 38, they're not going to charge me by the age 38. They're going to calculate my premium based on when I was 19. So I've locked it in. Right, so we meet people where they at, right? So we sit down and determine where you at, what needs to be covered, what needs to be protected. So example, if I meet a family man who has, let's say, businesses, have things going on, I can recommend a term plus the um, whole life or the index universal life. So, what are you looking for? We are here to solve problems and not push things at your neck like, take this, take this. What are the problems you have? What are you looking for? What is your plan? What is your end goal? So we look at all that and then recommend. The reason why I keep hammering on the index universal life, it's like a one-stop shop,
Okay.
right? If I need tomatoes, onions, and ginger, and I go to Walmart and I'll get it all in one place. Why should I stress myself and go to Costco and Sam's? I will shop all of that. It saves me time, it saves me money, it saves me the stress of just running around. So it's the same thing. I can have the index universal life and have the death benefit protection, have the riders, which is the living benefit, and also have the compounding, right? The whole life also does that. The whole life, there is the two types inside the whole life. One of them, we call the participating whole life. It allows you to participate in the market and then also dividend. So even in the whole life, depending on what the person wants, and we will be able to provide that. But for me specifically, I love the index universal life. I have a term, right? I have a whole life prior to me knowing all this information. I didn't close it because I got it so early. It was cheaper and it's for my whole life. So I don't mind. I have a term. Why? Because let's say when I got my permanent insurance, it wasn't much. It wasn't covering all my assets or anything. So I can get the term to supplement it. Let's say in the next 30 years, God forbid if something happened, I still have a mortgage to pay, let's say 700,000. That term can pay for the mortgage. The rest of the money can go to my family. Right. So it depends on where you at in life. We meet you there, provide you with the necessary tools and then the strategy to get you to your financial goal. Yeah.
Okay. So, in your submission, you mentioned something. So, for somebody like me who purchased a term insurance a while back,
Right.
and now that I'm knowing this information,
Right.
can I call my insurance company and let them know that now I want to change from the term life insurance to, let's say,
The permanent.
the permanent?
No, it depends on what company you use. Not every company offers that, right? So for somebody that I know that we will later change it to a permanent insurance, I'm going to use the companies that provide that services. So you have to know what company you're using. You can call them. That's why it's good to do review every year. The best thing to do for your life, you don't just, some people don't even remember their face amount, which is the death benefit. If you ask them how much insurance do you have, I don't even know. I know that they take it out of my, my account every month. So you just have to do review. If any question comes in mind, you ask it. But I'll tell you, keep it, right? Because you just never know. Now you are expanding. When you got it, let's say it's just you and your wife and one child, but now the family is expanding. Now we need a bigger policy to cover all our net worth, right? So you can keep it, but it's good that we are putting the information out there so people will know the different types and then also get to know the right choices. But to really determine, you cannot just say, okay, I'm gonna get this. Unless the person has done their own due diligence and decide to say, I need you to do this for me. But for somebody who has no knowledge about what they want, or we have to sit down with a financial professional for them to help you with that strategy. Yeah.
Then I think most of the agents out there should really do their homework well and tell us the right information, because somebody like me, the agent that came to me didn't tell me all this,
Yeah.
right? And I
Yeah.
purchased this term life insurance a while back.
Right.
So maybe I could have qualified for
The
all these.
permanent one. Yeah. I don't mean to cut you off, but I've come across a couple people that if you talk to about life insurance, they'll be like, oh, I don't want to hear it. Why? Because let's say they purchased a term for 20 years and now the 20 years has gone by. Let's say they were paying $20. Now they are, let's say, in their 50s or 60s. They go back and they say, hey, now your premium is going to be $300. It's like, wait, what? I was only paying $20, right? So people are like, I don't even want to, all that money I paid for, I didn't get anything out of it. But even though they say, oh, you're getting it for 20 years, it's going to cover you up. You don't expect to die in 20 years, right? But it's just protecting you within that time. But once that 20 years pass and the person is still alive, now they are upset that they are not even qualifying or they are even paying more. Because the older you get, the more that you are high risk of getting some illnesses and all of that. So you can get denied. Somebody that, let's say, qualified in their 30s can get denied in their 50s. You see that? So you really have to lock it in now. Like now. Somebody will say, oh, I'm waiting a little bit. Now is the best time to lock it in.
Okay. Can you share a situation where having the right life insurance in place has really changed a family's life?
Thank you for that question. I love what I do because of the peace that gives to people. So there is a situation that I met this person. I went to Walmart and I met that person. I'm like, you're looking like an African. Where are you from? And they're like, oh, I'm from Haiti. I'm like, you definitely. He's like, oh, we are brothers anyway. So it became like a joke and we laughed about it. So I had one of my business card with me for some reason. I'm like, hey, if you don't mind, this is my business card. Is there any way we can connect? He was like, sure. So he actually even reached out to me 2 days later because I didn't take his number. He reached out to me, so I explained to him what I do via Zoom, and he was amazed. He is in his 50s and has never heard of that information before. He has 5 kids, lives with the wife here. And he was like, this is amazing. I need you to help me with the application. I don't have all the information, so let me gather the information and then I will get back to you. And then he did. But then he ended up also sharing the information with somebody else, a colleague of his. They reached out to me and I also helped them. A week or so later, everything went through, payment went through. 2 months later, they called me and was like, Sandra, you're not going to believe this. This person was coming from work and unfortunately, a truck driver ran into them. The person is in a critical situation at a hospital right now. I was like, wait, what? It was something that I wasn't expecting somebody, because it was just a client, but the conversation led to like we know ourselves from far. And like, oh, my sister, he became like a brother right there. So it was really heartbreaking. Went to visit them and all of that, but unfortunately he couldn't make it. So in that situation, if he did not share that information with them, he would have also left the family with nothing, because before, like, all their assets would have gone to probate. If he had never purchased the insurance, all his asset would have gone to probate with him not being there. So that was just fulfilling for me. Even him passing was sad situation. It was fulfilling knowing that he did not just leave the family empty.
Empty.
He left the family something to depend on. So they didn't have any trust in place because we were yet to talk about it. So he was like, okay, we talk about it later. I don't think I'm ready yet. I want to put things in place. But at least at that point, while all his assets is going through probate, the life insurance will go to the family right away. So in that situation, it gives me that fulfillment to just keep going. And then just don't close your mouth. Whoever you see, share the information with them because you never know who you're going to save. There are so many instances. There is this guy called Scott, one of our team member helped. A truck driver has a stay-home mom with 3 beautiful kids. He has come from work, walking in the neighborhood with the wife. Honey, I don't feel good. Call the ambulance. Ambulance came. He had a heart attack. And he has purchased the insurance only 4 months. Just 4 months. So he was at the hospital for a long time. The wife called the company and said, hey, my husband cannot pay the insurance because he's still at the hospital. So I hope we are not going to lose it because most of the insurance, if you don't pay for a couple months, you're going to lose it. And they were like, wait, he's at the hospital. What happened? The wife explained and she's like, oh, no, we have to send you money. What proves? So she sent all the paperwork from the doctor and everything. They sent her a check of $353,000 from having a critical illness. You see that?
Right.
So it's so fulfilling that we don't do the insurance for something to happen, but at least we prepare ourselves just in case. We pray to God for protection and all of that. But just in case things do happen, you just never know. You can be doing everything right. Everything can be planned, calculated. I'm going to Walmart. I'll be back in 15. Anything can happen. So planning helps you prevent if uncertainty happen. You'll be able to have that peace of mind. Yeah.
Wow, this is very touching. I wanted us to talk about the process.
Yeah.
The process that one have to go through to get approval.
Yes.
But can you go back and talk a little about the whole life? Is
Yes.
there any difference between the whole life and the universal index that you mentioned?
Yes. So the whole life is number one. Number one difference is that it's up to 100 years of age. That's the whole life, right? The index universal life, on the other hand, is up to age 120.
Okay.
The number two difference, the whole life, it has dividend. And then also some companies also gives you interest rate, right? So it's at a fixed interest rate. And then on the index universal life, on the other hand, you participate in the upside of the market. So you are participating in the market, but you are not on the market, which means if the market goes to negative, you don't lose any of the money that you are building in that account. On the whole life, dividend, as in if the company makes, let's say, $1 million at the end of the year, split it among all the policy holders, and then it's a fixed interest rate. Let's say the company say we're going to give you 5% interest rate, 6% interest rate. On the index universal life, depending on the allocation you put it, you are not capped in the market. So if the market makes 20%, you're going to make 20%. On the whole life on its own, let's say it grows on level, which means if the person passed away, so example, I purchased a whole life for $500,000, and then I build a cash value, which is the dividend or interest rate, for about 20,000 over time. If God forbid I am no more, that money that I've gained in there, which is the interest, goes back to the insurance company. They will not add it on to the death benefit.
Oh,
That's how the whole life works, right?
wow.
But with the index universal life, the money, which is the policy value, is added to the death benefit for the family.
Okay.
The whole life, most of the companies, it does not come with living benefit.
Okay.
But the index universal life comes with living benefit, which is the critical, chronic, terminal.
I think the name whole can be a little deceiving from the
Yeah.
explanation that you are giving to me though.
It's a whole life.
It's a whole, so
most people don't live up to age 100. So it says whole life.
but I didn't like the fact that the
cash
interest,
value goes back,
go
yeah.
back to the.
Yeah.
So in case of anything, and let's say you purchase $500,000 policy,
Yeah.
if you pass on, the family is going to get that money.
Money, yes.
But
whatever cash value in it, if you don't use it before you pass away, it goes back to the insurance.
Oh, okay.
So you are allowed to use it
while you are alive.
while you are alive.
Okay.
Yes.
Okay.
You don't just lose it all. While you're still alive, you can use it. So if you have a whole life, you need to review it every year, especially if you have the participating and not the regular whole life. If you only have the deaf one, there's no cash value in it. So you don't really get anything out of it. But if you have the participating, you need to make sure you're reviewing it every single year to see what you have in there. Use it while you're still alive, because nobody knows when they are going to die, right?
What are the process that one go through to be finally have an insurance approved or declined?
When you sit with me, I first of all will ask you a couple questions, right? So what are your financial goals? What are you looking for? If the person have no knowledge, there are some people like, I just want insurance. I don't know much about it. So explain to me. I will share information with them. After the information, we will just put in the application. It's a free application anyway. We don't take your bank information. It's just simple information. Name, date of birth, just simple. Once we submit it, it goes through underwriting process. So they are going to look at your medical records, to make sure everything is good. Like example, let's say if you are somebody who is a hiker, right? You are a potential risk to the company. So they're going to look at all of that. Are you a pirate? Anything. They're going to go through a detailed underwriting process to make sure that you are not a really high risk to them. Once it comes back and it's approved, they will get back to me that as an agent, and I'll be able to sit back down with you and see, now that you're approved, what actually do you want to use this account for, especially if you're doing the permanent one. If you're doing the term, it's straightforward. We know that it's for the death. There is nothing else. So we will be able to calculate your net worth, what you need, and we'll put it in right away. But if you're looking for a permanent one, we have to actually dive more into it to put everybody in the picture, to, especially your income, how much you make. We want your income to be protected. If you have any business or asset, how much does it worth? We want that to be protected. Everything, like the kids' college, if they are not in college yet, we want that to be included in it. So once we sit down, we will be able to use our system to come up with exactly how much you're going to need. And then once you set it in, we'll be able to go through the payment authorization process. And once everything goes through, delivery requirements are signed, everybody it's at peace, and you have your policy. And then if it comes back and the writer comes back and it says your decline, they will give you a reason why they decline you. So it could be health issue. Mostly it's health issue. Most of the time it's health issue. And I'm telling you, it's not even the older people that get declined. I have a 1 year old get declined. A 1 year old, a baby. Why? Because they had a cold and they went to the hospital. It was very severe, had a pneumonia, so they gave the child asthma medication. So now they think the child is asthmatic. Now you become a high risk. So they have to evaluate her again as how she's doing before they can, give that policy to them. So mostly it's health that will get you declined.
So if one get declined, can you reapply again or?
Yes.
Okay.
Let's say I have companies that decline somebody, but different companies will approve them. So every company and their underwriting process is. So
okay.
something that is nothing to this company they will approve you for, other company will say no, we won't take it. So I have a couple people that got declined with one company, but other companies get approve them.
Okay.
And then some of the companies they will say, okay, we are giving you a year. Come back with a different blood work showing whatever we've seen has improved, and you can reapply.
Okay.
Yeah, there are instances like that. But if you have like a chronic illness that is a severe thing that is going on, like you already have kidney issue, you already have cancer, that your chances of getting approved is going to be hard.
You mentioned a situation where maybe they will find out something that you may not have put in your application.
Yes.
So let's say I have this disease or sickness that I'm not aware of.
Yeah.
Right? And I think I put in the application, and obviously they have a system to be able to get my medical history.
Yes.
Right. And they find out that I have this. Does it mean I have lied on my application or?
Yeah. They don't really hold you responsible, because there are some times that you will go to the hospital, tell your doctor your problem, and they will put their English or their words over there, but you have no knowledge about it. So I have a situation that it came back, the lady, they said the son has autism. But nobody has ever told her your son is autistic. Nobody is referring her to a therapist. Nothing is going on. This child is fine. So she was really upset and like, I have no idea that this is on my child's report, because in the initial stage of the son, he was acting too harsh. Some kids are very energetic and hyper. So I don't know. She think that's why they came up with that, but nobody told her about it. So in that situation, it's not your fault. You're able to reach out to the doctor's office, talk to them about it. If that was a mistake, they will recorrect it and you can get the policy. But let's say I have some disease, I've never gone to the hospital, so I don't know. I get approved and later it pops up. I didn't know I had it. So anything that is already on your record, they will find out. But if it's not in your record yet, they will not.
Okay.
Yeah.
Wow.
But you also have to be honest with yourself when you are putting the information. Yeah, you have to. Because let's say you're severely sick, like severely sick, and you think, okay, let me get the insurance and then go through the application. The next day I'll go to the hospital and get checked. Sometimes they will figure it out and say, something fishy right there, because it was too close. Yeah. it's like somebody just intentionally harming somebody to get the beneficiary money. So
Right.
you have to kind of be honest with yourself. But if they don't see it, they don't see it. But to
Okay.
me, I go through all the health questionnaire with the person to make sure. Be honest with yourself. Even if you're taking vitamins, be honest. List it. Let me know.
Okay.
I'll be able to. Yeah.
Okay. Right. Thank you. I'm sure you are all enjoying this conversation today, and I believe by the end of today's discussion, you'll be able to at least have some clue as to how the various types of life insurance work, and you can able to make a decision from there. Again, we're going to leave our subject matter expert here. The information is going to be under the screen. Feel free to call her, email her. You are not going to be charged, and she's going to render all this information to you for free, so that at least you can make the right decision for yourself and for your family as well. And again, I want to remind you that today's program is sponsored by Kitchen, your number one go-to place for all your catering needs. If you are here in Pennsylvania, York, Harrisburg, Lancaster, Mechanicsburg, and even Philadelphia, and you are looking forward to have someone cater for your event, contact Kitchen, and they will make sure they give your guests the right food to make your event lively. Coming back to the insurance, so I know some folks, or most of the Gen Z nowadays, talk about this digital marketing, stock, and stuff like that. And I know a lot of people are trading in all these various platforms. So if I have some of these strategies in place, isn't that enough for me to say I am okay and leave life insurance alone and participate in stock, Bitcoin, and all those things?
Yeah, that's a really great question. Having those strategies in place is good because the name of the game is diversification. You cannot put all your eggs in one basket. So, having stocks is good, having Bitcoin, all of that is a variable account, right? So, what do you have in place to protect all those assets? So, example, Bitcoin, crypto, stocks, they are all variable. It goes up and down. So let's say if the market goes to negative 40%, you're going to lose 40% in all of them. But on the other hand, with the insurance strategy that comes as a protection side, that's a shield that covers all those strategies because you don't lose any of that money. So while I'm losing here, I don't lose any money in my index universal life. You see that? So it's good to have all those, but you need to make sure you have something to protect those accounts. Just in case this doesn't go well, I still have this. You see that?
Okay.
So if I am putting all of it into my stocks and I don't have any insurance and my account goes to negative, I'm losing. I'm really losing. So it's just a great strategy to protect that asset that you have. It's good strategies. Investment in a real estate, they are all good. You need to diversify your portfolio. You cannot just build your future on one strategy. It's not going to work. So have all those stuff in place, but make sure that you're serious fans. The money that you don't want anything to happen to it, no matter what, make sure you have some in a life insurance strategy which will protect those.
If I have a pre-existing condition, can I qualify for the term life?
It depends on the severity of it because there's somebody that I've tried so many companies, everybody declined.
Wow.
So many companies. Even a company that I know that They take everything. They gave him 10 years to be cleared from, whatever he has going on before. So,
Oh, this is interesting.
yes.
So even
with term, yes.
even with term,
Yes.
you can
Yes.
they can decline.
Yes. Even with final expense. Yeah. I've tried everything.
Wow.
Yeah.
I thought the term is the
The least, yeah.
the
Even
least-
with terms, some companies required blood work, vitals, and all of that. Yeah. Yeah. That's why I'm telling you, get it now in your most healthiest state.
State.
Especially if you have teenagers, if you have college students and stuff like that, get it now. Lock your insurability in now that you are young, you have the strength, just lock it in now. And then later you can switch to permanent. Even if you can't afford the permanent one, lock it in now. Because the healthier you are, the even more cheaper. Example, if I am 40 years old, you're 40, and I'm a smoker and you're not, mine is going to be more expensive than yours because I am a high risk now. Because I'm a smoker, I have potentially getting sick and all of that. I'm not saying all smokers can get sick, but you are a high risk. If I have a high blood pressure and you don't, yours is going to be cheaper than mine because it's different risk class that the underwriter is going to put me in. Yeah.
Okay. All right. Thank you so much. I think we are almost getting to the end of our conversation. So for our viewers and listeners out there who are coming across this video for the first time, what advice would you give to them?
First of all, sit with a professional. It helps a lot, right? You can contact me. I'll be able to help you. My team are always ready to help. We'll be able to help you to answer any questions that you're looking for, any doubts, give you clarity. That's our job. Our job is to give you the clarity you're looking for. So number one, say with a professional, get to know the information, get to know all the types of the life insurance, the advantage and disadvantages. Let us know where you want to go in life. What is your goal? What is your plan? Let us know. Open up, right? Some people are so buckled up, they don't want you to know what's going on in their life. But I'm neutral. I have HIPAA regulations all tied me up. I can't do anything with your information. I can't go gossip about you. So please be open. Let us know where you at so we'll be able to meet you at your needs. If we know where you at, we'll be able to recommend one for you and get you the right coverage and the right protection. Another thing that I also want to talk about is religion has really tied us up so bad that we are not ready to unlearn what we've already learned. Religion. It will surprise you the conversations that I have. There are some people that believes that, God will protect them, so they don't need insurance. But we are talking about living legacy. While you are installing the faith legacy in your kids or in your family, you need to leave that financial freedom legacy. You need to give them that peace of mind, God forbid if you're no more, right? And we don't know when that's going to happen. So viewers, I am pleading with you. So with a professional, let's talk about what you need. We should learn when it comes up. If you hear an information, do some research. Don't just lock your mind up to the point that you're not ready to unlearn what you have in your mind. Because if you keep doing that, you're setting yourself up for failure. You are setting yourself up for failure. Because what if I can get a permanent insurance and I'm just stuck with term insurance? right? And some people will say, oh, buy term and invest the rest. You can do that. But how many people even know where to invest, how to invest? A lot of us don't know. But if you have the right strategy, which is one of the permanent one, which is the index universal life, I'm not saying the rest is bad. They are all good depending on where you are. But let's say if you have the potential to have the permanent one, which is a whole life or index universal life, why not get it? Right? But because you have your mind closed up, you're not ready to do anything to better yourself, right? So I'm here to help. My team and myself, we are on standby to, bring awareness to my community. And that's why I am so passionate about what I do. I would love to connect with you, share with you the information, get you to have the clarity and peace of mind that you're looking for. So when you step out of the house, you can look at your family and say, you guys are in good. You guys are in good hand. I have things in place. I've planned the life for you. Because this life is about planning. God can have his way, but you have to plan. You have to put the plan in front of him for him to guide you through it, for him to direct your step, right? So that's one thing that I'm going to leave with you. Protect yourself in private, right? So you can avoid disgracing your family in public. GoFundMe is not the way. GoFundMe is not the solution. Set yourself up right now at this moment with the right strategy that will lead you to your financial freedom. Thank you.
All right. Thank you so much for again making time with us today.
Thank you for having
me. It's
me.
always a pleasure to have you on this platform.
Yes.
Because the information you give out almost every time is very mind-blowing. And if you are out there and this is the first time that you are coming across this information, I will encourage you to take the number under the screen, reach out to her, and she'll be able to walk you through the process so that you can secure yourself and secure your family and loved ones. I am always excited to see friends and family out there who make time to watch this video till the end. If you are out there and you have any question or concern, please leave them under the comment section. Or if you have any special topic that you would like us to cover, leave that information there and the team will do our best to look for someone who has the right knowledge to come and educate us on this platform. Again, thank you for making time to watch this video, and we look forward to seeing you in our next episode. Have a great day.